numbers.
Ravi Dharmesh is also ready. Ravi, good morning. Nice to have you. So, is it going to be just another day, or it's going to be a big day with swing, and today market will react to what we will hear on the budget?
I think for a change this time around, budget is not a non-event. It will lay out the intent of the government with the next 5 years point of view in how they are going to prioritize their spending. And I think that can lead to a lot of change and transition in the way you position your portfolio. So I am looking at it. It's a keenly monitored budget for sure.
So, Ravi, what would be that directional impetus from the government, which in a sense will convince that there is going to be continuity, and this budget in a sense is going to be giving that springboard for the economy to leap forward and for markets to maintain its upward trend? I mean, what is that construct which you would be watching out for?
So, from broad directional point of view, there is no doubt about it that they'll continue with the thrust on the growth. It's just what we are keen on monitoring is that thrust going to be provided through capex related themes, or is it going to be provided through revenue expenditure related theme? And from that perspective, our base case is that capex continues. Incrementally, there might be not a big jump since this is this is a follow up after the interim budget. So the intent was quite laid out, 17% growth in capex. Will there be a further bump up in that? Maybe a small bump up, but incrementally, I think the turnaround might happen on the RevX side, and that might be a signaling that there is acknowledgement of the fact that, of two things. One is political compulsions, and second is that there is actual rural distress, and there is a need to revive the same. So I am looking out for more an incremental shift towards RevX and continued thrust on the capex.
Some data, which is that this is the highest pre-budget rally in last 7 budgets. Historically, markets, if they've rallied ahead of the budget, they tend to adjust those gains. And even though the importance of budget over the years has got diluted, budget still tends to be this swing factor of 4 to 5%. Are we in for a post-budget sell-off, or this momentum which markets have added in last couple of weeks, whether it's budget or liquidity, you think that is here to stay?
I think the volatility is definitely here to stay. Levels are elevated. So even a minor negative in budget can swing the markets in a big way. So I don't rule out 3, 4, 5% kind of a move in the market today. And it could be either side. I don't want to hazard a guess. But I do want to say that I think the efforts of the government will be towards putting slightly more money in the hands of the rural and the middle class. And if that is there, then broadly it will be it will do is broad base the markets and the economic boom that we are witnessing right now. The economic boom is quite narrow and probably at the top of the pyramid. That needs to get more broad based, and I think if we see some steps towards achieving the same, that would be a positive.
Thanks, Ravi, for making time and speaking with us, and hope.
If you like this video, then like, share and subscribe to ET Now.